There is a lot of buzz that the government may look at, the new government may look at breaking up Coal India into several smaller units and perhaps explore other ways in which productivity in this company may improve, more foreign investment. We are going to ask people best placed to answer that question. Parthu Bhattacharya, former chairman of Coal India, and Oscar Veluyan, the fund manager at the TCI Fund Management, one of the largest investors in Coal India, are joining us. Let's start with you, Mr. Bhattacharya. All this buzz that probably Coal India is going to get broken up. You tell us which is the best way to increase coal output. Is it that you break up Coal India, or is it that you should denationalize the sector?
Well, thank you for that question. I have always felt that it's time that we actually denationalize, because opening up of the sector is the most crucial step that the new government can take to bring in multiple players with core competence in coal mining, and that can make all the difference. And let me take you a little background on this. You see, the fact that Coal India will not be able to meet the country's coal demand if the power sector goes for accelerated capacity addition was very clear in early 90s. And that's the reason the Coal Mines Nationalization Amendment Act was enacted in 1993. But the scope of that act was to induct players to the captive mining route, captive end user route. Now, captive end users doing coal mining is not a model which has seen great success in any part of the world. And today, after 20 years, what we find is the contribution of that sector, captive coal miners, is just about 8% of the total production. So very clearly that has not succeeded. Incidentally, the bill for repeal of Coal Mines Nationalization Act was introduced by the NDA government in 2000. That was in the year 2000 it was done. But there was a huge resistance. And the resistance possibly was because of the fact that Coal India at that time was a fairly, it was still loss making. It had accumulated losses in the balance sheet. And the feeling was that it will be swept away through competition. I don't subscribe to the view that Coal India will be swept away in against competition, against global majors, because when the IPO was done in 2010, it came out absolutely flying high, and the valuation of the stock in terms of
Mr. Bhattacharya, so is your argument therefore that because the NDA was the one which actually first introduced the repeal of the act, that is the best course to follow, and that is the best course you're expecting now that Coal India is in a better position to weather competition?
Absolutely.
Okay. Denationalize would be the mantra. Should be the mantra.
Should be the mantra. Then transparent process of actually allocating the block, whether through auctions, etc., to large coal mining companies, global mining companies. We should have at least half a dozen Coal Indias operating in India. And in that situation, breaking up Coal India may not be ideal, because we should have a strong domestic player as well.
Okay. Mr. Bhattacharya, actually, that is a point that an analyst was also making, that it would be very hard to implement the breakup of Coal India, divide the ownership, etc. So, do you think this was something that someone had pointed out, that perhaps there could be an introduction of some sort of incentive structure so that the state governments could themselves participate in the growth of coal mining in their own states? Do you think that could be something that, if put on the table, could help?
See, the problem is, in any of the other routes, you are not getting players with core competence in coal mining. Now, none of the state governments have great competence in mining coal. Coal mining has technological challenges, safety challenges, all kinds of challenges are there. It is not so very easy that anybody can do coal mining. So that aspect is somewhat undermined in either doing it through captive mining route or asking the state governments to get into mining. You need large mines. You need large competence, technological competence to do mining, because the blocks are becoming more and more difficult. They are becoming more and more challenging. Although India has huge coal resources, we are sitting on resources close to 300 billion tons, and there is no need for India to suffer from coal shortage. If rightly implemented, right policies, right number of players with core competence, I'm quite sure that the scenario can be changed in maybe in a 5 to 7 year kind of a time span.
Well, Mr. Bhattacharya, you're watching the political firmament as much as we are watching. My sense is that people are guessing the Coal India breakup and state governments getting equity stake as an option, primarily because we have not seen Narendra Modi privatize or even divest in public sector units in his own state. So there is a bit of a reluctance to believe that he will go the whole hog and actually repeal the Nationalization Act. What's your best guess?
See, if you have to solve the problem, you need to have multiple players with core competence. Whatever route leads you there, it's okay.
Okay.
Now, to my mind, breaking up Coal India, having state governments invest into that, doesn't really add to multiple players with core competence. Yeah. That's my feeling. So it's not going to have a fundamental solution.
EPC contracts to foreign companies and all cannot be managed within this structure?
No foreign coal mining company will be really interested for being an EPC contractor. Because they want to own assets. I mean, you check with BHP Billiton or Peabody or anybody like that, they will not be interested to be an EPC contractor.
Okay. So, Mr. Bhattacharya, in your mind, what do you think could be the top priority of the new government? Will it be to first solve the issue of, of the coal volumes? Because, that is one of the main reasons why the investment, we've not seen a resumption of the investment cycle, etc. What in your mind could be the top priority of the government?
You see, to my mind, basically, the power consumption in this country, per capita consumption, is one of the lowest in the world. We are 1/3 of China. 35% of the people don't have access to power. So accelerating the process of power capacity addition, to my mind, is one of the most important development agenda for the government. And that is today held up because of coal. I mean, I would say that 3 plan periods, 8th, 9th and 10th, the power sector couldn't get its act together. They were faltering. But from 11th plan period, they have been accelerating. But there the coal became a problem.
Mr. Bhattacharya, at the moment, the bankers tell us the situation is actually standing on its head. Fuel supply is not the problem for power companies. Buyers is the problem. Discoms are not solvent, and even where they are, like CESC is a solvent company, they have had a problem passing on higher power tariffs. Now, if what you say is true, that they denationalize, foreign companies come in, you auction coal mines, it is the writing is on the wall that coal prices will go up. And already you're not able to see consumers stomach even this level of tariffs. Do you see price becoming an issue?
Well, I feel that with multiple players coming in, I think there will be competition in the coal mining space. The competition is not there today. So with competition, I believe coal prices will come to a more stable situation. In any case, the prices are lower than imported coal prices. And if we don't do this, then we are going to import the balance. And that's going to create a further strain on the whole situation. So by doing coal mining today, you see, we are today importing about 180 million tons of coal. If that import can be replaced by domestic production, definitely the cost of coal will come down.
All right,
Mr. Bhattacharya, thank you very much for joining us. I think that's a clarion call from someone who has seen this industry and headed it for a goodish bit at its IPO as well. The very clear call is denationalize. Any other cosmetic changes are not going to help.
Yes,
but we have another expert joining us.
Yes, we do. In fact, Oscar Welchen of the TCI Fund Management is also with us. Oscar, thanks for being with us. The PSU stocks, including Coal India, have run up, expecting big things from the new Prime Minister. What are your expectations from the new Prime Minister, specifically with respect to Coal India?
Well, I think it's great news for India and investors in Indian stocks. Mr. Modi is focused on making power available to all people of India, and in order to achieve that, he will have to dramatically increase the production of coal and the availability of coal to power plants. In order to achieve this, or in a way to achieve this for him, he has to cut through the red tape. He will need to accelerate approvals, environmental approvals, and involve the private sector to accelerate the production, coal production. Now, the involvement of the private sector will only be possible if happening at an attractive rate of return. And in order to achieve that, they will have to move coal prices up in order to offer attractive returns. We're also probably going to see some management changes in order to boost the quality of management
Oscar,
and to reduce corruption.
Sorry to interrupt you, but Modi is known not to privatize some of these government companies, and in his zeal to supply cheap power, he perhaps will keep the coal prices low. Would that worry you?
Well, I don't mind, or I don't think it's necessarily counterproductive if the government remains in control of Coal India. What's required is just an improvement in the quality of and improvement and better quality management of Coal India, greater monitoring, reduction of corruption, perhaps the involvement of the private sector in terms of mining, so not necessarily private mining companies, but having private companies being involved in the underground mining. So having the government involved is not necessarily a problem. And if the prices are not being raised, then we certainly need to see an extreme or massive improvement in the efficiency for some of these mines which are loss-making at the moment.
Oscar, actually, let me present the other scenario. I don't know if you just heard the former Coal India chairman speaking to us, Mr. Bhattacharya. He thinks that the best option is to denationalize coal, which means private companies would be allowed. In that case, Coal India's monopoly would get broken. Would that worry you?
No, not at all. I mean, it will also mean that Coal India will have less pushback, so to say, when it comes to their own initiatives and face greater freedom, rolling out projects which they like to get involved with. But again, it all depends on the new management in terms of what their priorities are and what their commitments are. So that's it is hard to see how this will unfold. But from our point of view, it's hard to see things getting worse from where they are, given that there's so much. That Coal India is sitting on so many reserves and a strong balance sheet. There's massive potential of this sleeping giant for it to improve its production and profitability.
Okay, you actually earlier told us a lot of steps. According to you, what are the low-hanging fruits in terms of reforming Coal India?
Well, as I said, I think one of our priorities is to roll out the washeries. It's not very complicated to set up washeries, which would improve the quality of coal and reduce the environmental burden, but also debottleneck the burden on the rail capacity, which is limited, as we all know.
Will you add to your holdings in Coal India now that you expect better times?
Well, all I can say is that Coal India offers enormous intrinsic value, and the probability that will be unlocked has only increased now Mr. Modi has been elected, and so everybody has to make up their own mind. It might take some time, so I think it's a very suitable investment for long-term investors, that's for sure.
All right. On that optimistic note, we let you go. Thanks, Oscar. So, suitable investment for long-term investors. Look at the way Coal India is moving. In fact, it is the biggest Nifty gainer in trade today, up almost about 5% odd.